Everyone, and welcome to this YouTube channel. My name is Gil Trading Lab. If you're new to this YouTube channel, please like this video, share, and subscribe. It's another day, another dollar to make. On this video, I'm going to be doing a precision analysis on EURUSD, and I'm going to be starting from the daily time frame. On today's video, I'm going to be starting from the daily time frame. So on the daily time frame, my swing structure is bullish. This is my swing structure. Sorry, that is my strong swing low. That is my weak swing high. And this was the breakout structure that confirmed the bullish breakout structure. Confirming. So now swing is bullish. After the swing breakout structure, price mitigated monthly supply, and from the monthly supply provided a reaction which gave us now the swing pullback. So price pulled back, tapped into the EQ of the swing range, has now mitigated last week it mitigated weekly demand, and from the weekly demand we can see this reaction, so which gives us a bullish bias to look for longs. So this the mitigation of the weekly demand could provide a reaction that could help form the next swing leg. So price could likely target the weak swing high now, but we are stuck. But one thing to note is that price is stuck in between supply and demand. See, if let's say when price was here, this was a good moment to look for longs, because we had clear that it was clear that price had not mitigated anything, so we could look for longs to the next key opposing level. But right now price is stuck in between supply and demand, so which makes things really tricky. So we don't know. So it's best we wait for one to win, but we can also play the ping pong between the zones, which we can look for longs from the once price, like now the way price mitigated the weekly demand, we can look from longs from this demand to supply. Then once price mitigates supply, we can look for shorts back to demand, and we can. But you see, price can start forming a range here. But hopefully, the overall momentum that I'm expecting is this. Well, I'm expecting price to target for swing to shift, daily swing to shift bearish, so that we can get that price can form the next monthly swing leg. So for today, I'm expecting to look for longs to supply. Currently, I'm just looking to trade this ping pong. All right, so let's drop down to the. But now you see, I'll be interested with longs, and once price mitigates supply is when I'll be interested with the shorts. So it can either be after mitigation or even after the swing breakout structure. All right, let's drop down to the 4-hour time frame. So on the 4-hour time frame, my swing structure is bullish. This is my strong swing low, and this is my weak swing high. That is the bullish breakout structure. So after the swing breakout structure, we got that deep swing pullback, and within the swing pullback, price formed this internal structure. This internal structure, this is the strong internal high, and this is my weak. This is the weak swing internal low. So once price pulled back to the EQ of the swing range and mitigated but another thing is price mitigated the daily fractal, the previous unmitigated fractal range, and from that we have seen this reaction. But the whole of this is demand. If I draw it like that, the whole of this is demand. Let me drag it like this. It's demand. It's just that we just refine to them. You can't look for orders within this huge range, so we refine to them, to the pivot zones within the huge range, but the whole of this is demand. So let me leave it here, well, so you can be seen here like that. So price pullback mitigated the demand range, and we got even this strong liquidation, and from that strong liquidation we got this huge momentum. Maybe that strong liquidation could be the catalyst for price to form there. So it could mean that maybe now the price has formed the next 4-hour swing higher low and also on the daily, the next swing higher low. But as we've seen from the higher time frames, is even the monthly supply have made it to be visible even on the 4 time frame. You can see if price pops up, mitigates this, and we see a huge sell-off, we will understand that price has mitigated a higher time frame supply. So for today now that price has mitigated that, I'm interested with looking for longs. Now that I'm interested with looking for longs, and price, we can see from the 4 time frame, price has pulled back to the discount of the range. We can see that strong liquidation, so it's not but this is not a must for price to pull back to demand for the higher low to be formed. Even as long as price has even tapped to the EQ of the range, buyers can kick in for price to push higher, to push price higher. So for longs, now that price has pulled back, stopped liquidity, and it has pulled back to extreme internal supply. But this internal supply could form the next internal lower high, and we could see price form the next internal leg. But we understand that all internal was bearish only to facilitate the swing pullback. So this internal trend cannot last forever. We understand only it has been bearish to facilitate the swing pullback. So once the pullback objective has been met, we expect it to shift bullish for price to target the weak swing high. So now, after the strong liquidation, maybe this could form the next swing higher low. So meaning this supply can fail to hold, but also it can still hold, because even from the higher time frames we expect this is the overall momentum that I'm expecting. But price is also coming from demand, and from demand we can expect a huge reaction back to supply. So for longs, to get involved with longs, now that price is sitting within, it has mitigated. You see, now looking for longs isn't ideal, because you see the objective of this bullish move has been to facilitate the internal pullback to supply. Now that pullback objective is complete, now what can we do now? So we can wait for this, either for this supply to fail. You see, we can wait for it to fail. We can wait for a failed reaction from the supply, or price to trade. You see, once price trades above the high of the internal the supply, then that means that the supply has failed. So we can wait for that, for the supply to fail. Then we can look to keep following the order flow to the week swing high. So that's one way I'll get involved with the longs. Another way on which it can take a while to play out is if we let just price to form the next internal leg, we let it mitigate to mitigate demand, then we can look to catch the swing higher low to play the next, to catch the internal leg, the internal pullback, because once price comes and breaks this low, we'll have a new strong internal high. So looking for longs from here, it will be to play the internal pullback. And we can also anticipate that internal will shift bullish for price to target the swing high, because as I said, internal has been bearish to facilitate the swing pullback. And another way we can get involved is all these scenarios I'm explaining right now are things that can take a lot of time, and there is no need of waiting for them. But it's good if I explain to you all. So another way you can get involved with longs is if we wait for that internal to shift bearish again, for price to form the next internal leg, then we wait for the internal to shift back bullish. In this case, we will have full confirmation that this high is weak, and we can look for longs even from once price pulls back to demand. But it's not a must even for price to pull back to demand, because once price switches bullish here, how price is formed: impulse, correction, impulse. Meaning, once price internal shifts bullish, those deep internal pullbacks, we cannot get them. So price can form just straight push to the target there. Even from there we have drawn, you can see impulse, corrective, impulse. So now that's the way. That's what I'll be waiting for to get involved with long. So I'm currently waiting. But this candle has closed. I was waiting for this candle, this candle that opened at 2 a.m. UK time. I wanted it to break and close above this high, so we can have a failed reaction from this supply, but it has failed to close above it. So, and even as we can see from the 4 time frame, we can see clearly price is ranging in between this candle, this one candle, you can see price is ranging. So even without dropping down to the lower time frames, you can clearly confirm that price is in a sideways price action. It's in a range. So even for this supply to fail now during London, because to get the failed reaction, it means price will need to come to break and close above this weak fractal high, this fractal high. That will be the end of London session. So that for that to play out, I'll need it to play out during New York session. Or another way we can get involved during London session is if price comes and trades above this high, if it breaks the supply. But then since after this supply fails, we won't have any other supply zone for price to mitigate within this leg, meaning the next key opposing level that that price could target is like the next inflection point that price could target is this high. This high, above this high, there is a lot of buy side liquidity. But even above these highs, even above this high, the above this supply, because there's some people who don't wait for confirmations, and so there's someone who has placed even an entry like this and placed their stop above the high. You see, but it's a nice, a decent trade targeting the low. You can see it's 2R, meaning there's a lot of stop losses above this high. So price could target even that buy side liquidity, and then that could help facilitate to form the next internal lower high. But for me, after if there is no supply within the leg, I usually target the highs. That's where resting liquidity is. Even if you can see, even there's some kind of descending highs, meaning a trend line liquidity. So and meaning resting liquidity above this high, which price could target. So once the supply fails, I'll be looking for longs, and you see it plays the idea from even the high time frame. It plays out well. We look for longs now, targeting that high, that buy side liquidity. So, but if you see, like my drawings are like they're not drawing. It's not the laptop. It's my mouse. I think it has some issues. I'll change it. Let's drop down to the M15 time frame. So on the M15, my swing structure is bullish. But I don't mind my swing structure. I know it's that tight, but it's still we're still looking for the same thing, because even if you've drawn this as this as your swing break of structure, it's still the same thing. It's still the same thing. So this is my swing structure. There isn't much difference if you map the previous as this as your break of structure here. So my swing structure, this is my swing structure. This is my strong swing low, and this is my weak swing high. That is the swing break of structure confirming the bullish break of structure. So after the swing break of structure, a swing pullback is expected. Already we've had a significant pullback. That's why I've mapped this high as my weak swing high. And there isn't internal structure. Price hasn't formed any internal structure. But if price comes and breaks below this low, we will have a strong internal high. So price will start forming internal structure, which we can follow it to play the swing pullback. So currently price is ranging sideways. You can see it's moving sideways. It's not in a clear trend like breaking highs. So price is in a sideways price action, creating buy side liquidity. That's why you see I've drawn this dash line with them liquidity above. But this mouse is really messing me up, but it's okay. We can see buy side liquidity, and we can see less sell side liquidity. So to get involved with longs, longs currently are phase D, because there isn't any internal structure. So shorts are phase. But the shorts are phase D. Longs are phase A2. For shorts, price is sitting with it's currently within 4 supply, so we can expect some reaction from it. But I don't use 4 hour for my buyers. I use the daily for my buyers, and also the weekly and the monthly. But the daily is the one that weekly and daily are just zones that I use them to show me where we can see some reactions from, some huge reactions. Like where we can expect even the daily reversal. Like currently, we can expect the daily reversal since price has mitigated monthly supply. So now, 4 hour, I just use it to confirm the daily buyers. So, but if you want to use the 4 hour, it's still okay. It's still okay because price has mitigated internal supply where the internal lower high could be formed. So we can expect even some decent reaction. But even as you can see, once price mitigated it, we haven't seen a huge reaction. Price has just been ranging even, meaning we could see another push up. So for longs, not because I'm interested with longs, but then I'll explain all the scenarios. So if you see them, you can get involved if you're happy with them. But for me, I'm interested in looking for longs from the daily time frame. So for longs, what I'll be waiting for is I want to see 4 hour supply fail first. So if price comes breaks above this high, it will be a good. But then that will happen if price will have not traded above the supply, then I will need to trade during the New York session. But if we get the 15 swing break of structure and also we get the 4 hour supply failure, then I'll wait for either if price will have formed a session demand, then I'll wait for price to pull back to the demand, then I look to trade from it directly. If not, if we will not have a session demand, then I'll wait for price to pull back, form an order flow shift, then I look to trade from the fresh session demand zone. Another way you can get involved, if you are happy trading against the 4 hour, if you're viewing that this supply will fail, if you're anticipating it that it will fail, another way you can get involved is you can wait for price to pull back. Ideally, now right now you don't want to get involved within this range. But the currently price is in the middle of the range. Even if I draw it like this, you can see price is in the middle of the range. So if you trade from here, price can sweep a high, it can come sweep high and then pull back to the range. So the best way you can get involved is below the 33% of the range or above the 33% of the range, where once price mitigates 33% of the range, you can look for shorts, and once price mitigates the 33% of the below the range, you can look for longs to trade this range. I hope you're getting the idea. You see, price is in a range. It's in a range, so it can move up, down, up, down, up, down. So you can, if you want to trade the bullish move, you can wait for price to mitigate the 33% below the on the range. You look for longs. Once it mitigates 33% above the range, you look for shorts. But this is really low probability. What the advice is wait for a clear breakout of the range. So you can wait for price to pull back, sweep the sell side liquidity, then you can either place a buy stop above the high, and then you target buy stop order, and then you target the liquidity above, or you can wait for the sweep, wait for order flow shift, and then after the order flow shift, price will have formed a fresh session demand zone. Ideally, it forms during session, so you can have a fresh demand zone. Then you can look to trade from longs from there. You can drop down to the execution time frame, then you look for longs from there. Demand, targeting buy side liquidity. The other way you can look for longs is if you wait for price to pull back, ideally to demand, you wait for order flow shift, and then you can look for longs from the session demand. And then but you can see if price pulls back to here, it can take a lot of time, but it can still play out during London session or the New York session. You can wait for price to pull back to demand, wait for order flow shift, then you can look to catch them the next swing leg, because this is still the strong swing low. If price pulls back to here, then you get order flow shift confirming the low is holding, you can look for longs targeting the high. For shorts, you can wait for the bearish eyeballs, then you can look to trade either directly from demand. If it's not a session demand and you trade from session demands, you can wait for order flow shift. Then you can catch phase C longs, targeting the week low, or maybe to the discount prices, even potentially to this demand below, forward demand, or even the M15 demand. This is extreme M15 demand. Or you can also wait for the sweep of the high, wait for order flow shift, then you look to play the swing pullback. So that's all for today's video. I wish you all a wonderful and a blessed day. Peace.